Welcome back. You're watching Market Sense. GDP numbers for the first quarter in at 5.5%. Let's get a quick word in from Montek Singh Ahluwalia, Deputy Chairman of the Planning Commission.
From the 5.3 for the last quarter of the previous year, it's gone up 5.5 or something like that. That part is good. I still don't think I would call it a strong rebound. I didn't think that we would get a strong rebound in the first quarter. So really, I have said earlier that it's by the end of the second quarter that we will have a sense how strong the rebound is. But we did expect a rebound. So let's hope that in the second quarter, and especially the third quarter, you get a rebound. A lot will depend really on what happens to the level of investment, both public sector investment and of course private investment. And I think it's most likely in the second half of the year that investment intentions will begin to change.
So what 6.5 is safe now for the fiscal year? You think that that could be achieved 6.5 or above for the fiscal year?
You know, we have to make an assessment when we go to the full Planning Commission meeting. I mean, the most recent assessment is that of the PM's Economic Advisory Council. They had said 6.7. I don't want to just use a number off the cuff. By the 15th of September, we will have a good idea of what the number we're going to use. It won't be that different, basically.
So the services number are down to 6.9% from 10.3%. Is that worrying?
You know, when you get a slowdown, basically during the period that a slowdown occurs, I mean, different sectors slow down at different rates. In my view, I wouldn't worry too much about the sectors. I mean, the most important thing is investment picking up? Now, we don't have any data on that. This is only telling you the production level. I would look much more at the kind of corporate company level data which might give you a sense of what's happening to the investment in the economy. You know, from that point of view, I've seen some analysis which suggests that it's quite possible that the growth rate in the fourth quarter of last year may get revised upward, because there's a difference between what the industrial production index is saying and what some of the corporate data is saying. But we will have a better idea.
All right, that's the Deputy Chairman of the Planning Commission talking about the Q1 GDP numbers, which have come in much better than expected. Let's shift focus away and focus on the banking sector. We've got Ramraj Pai, who's director at Crisil, joining us now on the show. Now, Ramraj, to begin with, I'm referring to a report that you just put out yesterday. You've pointed out that there will be a sharp rise in CDR cases or corporate debt restructuring cases this year. Could you elaborate on that?
Yeah, I think, see, we had brought out a report some time back in April of 2012, indicating that we expect, the total amount of restructuring for, 11-12 financial year and 12-13 to be about 2 lakh crores. That's the estimate that we had brought out sometime about 4 months back. What we are seeing today is that, is that the pace of restructuring and, our estimates appear to be, we see that it is actually increasing quite substantially. We expect today that from our estimate of 2 lakh crores, in fact, the proportion of restructured assets could go up to as high as 3,25,000 crores by the end of financial year 12-13. So essentially, a substantial increase in the proportion of restructured assets vis-a-vis what we had estimated just about 4-5 months back. I think 2-3 things that we are seeing in the market which are having this impact. I think clearly one is that we are seeing that on the state power utilities, we are seeing some stress, and then the fact that there's a drop in the availability of unsecured short-term loans available to a lot of these state power utilities is going to result, and also the government in itself is looking at maybe some sort of a scheme for the sector, is going to substantially increase the proportion of restructured assets from the state power utilities. So that is one large area where we are expecting a material increase in restructured assets. The 2-3 other areas really are in construction and infrastructure related sectors, where we are clearly seeing that the balance sheets are under quite a bit of stress, financial flexibility is low, and the fact that a lot of projects are getting delayed, or the other issues with the infrastructure sector that we are all familiar with, is leading to a situation where some of these assets may not really have the strength and the resilience to go through the downturn. And that essentially will form the second part of this whole increase from 2 lakh to about 3,25,000 crores.
Right after, Mr. Pai, if you could tell us what makes you believe that CDR cases will rise so sharply. What are these factors that will lead to a sharp deterioration then in asset quality?
No, I think 2-3 things. I think, while interest rates do play an important element in the financial viabilities of entities, I clearly think, one is at a broader level. If I look at the economy as a whole, I think liquidity is something which is definitely impacting companies, and the non-availability of the right kind of funds, the right kind of loans at the right time is something which is impacting a lot of companies. One. Second, clearly is something that we are seeing, especially in some of the sectors, like I said about the infrastructure sector, is that clearly the balance sheets today lack financial flexibility, and maybe some of the larger groups we are seeing, possibly they have overextended themselves and are really in a situation where the leverage level is high, the debt levels are high, and in general, given the fact that there is risk aversion today in the market, the availability of equity as well as debt is becoming a major problem. So these really, if I have to say, at a broader level, definitely liquidity and the stretch in the working capital cycle, and specifically with respect to infrastructure and construction, I would say the weakening of the balance sheet and high levels of debt are some of the major factors that we are seeing.
Now, Ramraj, while the sharp rise in restructuring will of course help limit the rise of NPAs in the banking sector, have you done any research on what proportion of these restructured loans may eventually turn bad?
Yeah, that's what. So I was just saying that, the historical levels have been at about 15%, which means about 15% of assets which are restructured typically have turned NPAs. I would much rather use the word NPAs compared to using the word bad. Is a more technical term and maybe puts things in a better perspective. Our sense is that 15% is definitely going to increase. And based on our analysis and our calculations, we think that it is definitely going to at least go up to the range of at least 25 to 30% is what is our expectation. So yes, one way of looking at it is that, restructured assets enable a bank, to really limit its non-performing assets. But the reality of the situation is that whichever way you look at it, restructured assets do represent a certain degree of weakness in asset quality. So everything is remaining equal. If there are two banks, one which has X percentage of restructured assets and another which has 2X% of restructured assets, I don't think it is, everyone will agree that the bank with the X percentage is definitely stronger than the one with 2X. So, I would believe that, restructured assets continue to represent weakness. What degree of weakness, how that will manifest is something we'll need to wait and watch. But it is definitely a cause of concern for the banking system. There's no doubt about it today.
Thanks very much, Ramraj Pai, for joining in and giving us that perspective. That's the Crisil view on banks and the asset quality concerns which they believe loom large. Speaking of the banking sector, Prakash, you've got a call on a City Union Bank?
Yes, I like the structure basically. The way it's come down from 54 zones to 50 zones, the way it's moving around last week or 10 days. Looks like it should climb up to levels closer to 53. I'd have a tight stop just below the level of 51 and trade long. Looks like it should go up a bit.
Okay, so that's a word, 53 on the upside for City Union Bank. Thanks very much, Prakash, for joining in. A quick break right here on Market Sense, but on the other side, the rupee gains strength, bond yields rise after a surprise 5.5% growth for GDP. More on the macro impact in currency markets with Kilol Pandya of Daiwa Mutual.